the global wealth management industry is currently managing over $100 trillion. This is a figure so large it's almost impossible to visualize. But beneath the surface of these massive numbers, there is a hidden crisis that most firms are unwilling to admit. For decades, institutional finance has been built on a fragile foundation of unstructured data. We are talking about millions of emails, complex PDFs, handwritten meeting notes, and fragmented market transcripts spread across disconnected servers. Historically, synthesizing this chaos into a clear investment strategy took thousands of human hours and a small army of analysts. But as we move into 2026, the game has changed. The speed of the global market has finally outpaced the biological capacity of the human brain. In this environment, a 3-second delay in data processing is a multi-million-dollar leak. Today, we are deconstructing the AI stack, the 5 pillars that the world's most elite firms are using to replace legacy IT and build the first truly intelligent institutions. This is the blueprint for the next decade of wealth. Welcome back to the HQ. Pillar 1. Total destruction of the folder system. For 40 years, data in the financial world lived in silos and isolated islands of information that didn't talk to each other. If an analyst wanted to find a specific market report or a legal opinion from 2018, it meant hours of manual searching through archives. Elite firms are now building what we call corporate brains. These are private, highly secure large language models that have been fed every email, every trade ticket, every compliance report, and every research paper ever produced by the firm. Imagine an ecosystem where institutional memory is instant. Instead of searching for a document, an analyst simply asks the system a question. The AI finds the files, reads them, compares them, and synthesizes a narrative answer in seconds. Early adopters are already reporting that this single shift is saving executives between 5 to 10 hours of deep work time every single week. When time is the most expensive commodity in business, automation is the ultimate investment. Pillar 2. The world of predictive analytics and the death of the hunch. In the legacy era of finance, data was essentially a rearview mirror. It was used to tell us what had already happened. In 2026, the objective has shifted. AI is now being used to tell us what is going to happen next. By processing millions of data points across global markets, from satellite imagery of shipping ports to real-time credit card transaction data and energy consumption patterns, AI models are identifying market anomalies before they are visible to any human analyst. These systems never sleep, and they never get tired. They monitor alternative data sources 24 hours a day, looking for the tiny signal hidden within the massive noise of the global economy. For a private equity firm, this might mean identifying a target company's growth plateau 6 months before it ever appears on an official balance sheet. This represents a fundamental shift in institutional strategy, moving from reactive management to proactive architecture. In this new era, the firm with the best data model wins every time. Guesswork is no longer a viable strategy. It's a liability that no serious investor can afford. Predicting the future used to be magic. Now, it is simply high-performance computing. Pillar 3. The automated compliance shield. In the world of high-stakes finance, compliance isn't just a department or a set of rules. It is often the single biggest operational bottleneck, slowing down multi-billion-dollar deals and creating massive legal risks. The legacy approach involved teams of lawyers manually reviewing contracts and transactions for days on end. Pillar 3. Compliance as code. This ensures that every trade, every internal email, and every legal contract is audited by an AI engine the moment it is created. These engines are trained on every global regulatory framework, from the SEC in the United States to the GDPR in Europe and the ever-changing tax laws in Asia. If a transaction looks like a risk, or if a contract contains a predatory clause, it is flagged in milliseconds. This doesn't just reduce a firm's legal exposure to nearly zero. It removes the friction that usually delays institutional deals. In 2026, a firm's true security isn't built on a wall. It's built on a self-correcting algorithm that operates at the speed of the market itself. Security is no longer a gatekeeper. It is an accelerator for business growth. Pillar 4. Human emotion. The market is driven by fear, greed, and confidence, but historically, emotion has been impossible to quantify. Pillar 4 changes the game with sentiment engines. These systems are now capable of reading the mood of the entire global market in real time. By scraping tens of thousands of news sources, social media feeds, and earning call transcripts, AI can detect subtle shifts in CEO confidence or consumer anxiety long before they hit the headlines of the Wall Street Journal. When a major global event occurs, these engines provide the firm with an immediate report on how the world is reacting. They can tell you if a political shift in Europe will cause a sell-off in South American commodities within the next hour. This is the pulse of the global financial system. For those who can read this pulse, it provides the ultimate edge in timing. It allows firms to move into positions while the rest of the world is still trying to figure out what happened. In a market of millions, being the first to understand the why is how fortunes are made. Pillar 5. The automation engine. This is the glue that holds the entire AI stack together. Statistics show that most high-level analysts spend up to 80% of their time on low-value, busy work. This includes moving data from one spreadsheet to another, formatting reports for clients, and updating internal portals. AI-driven, intelligent workflows are completely deleting these tasks from the human calendar. We are currently witnessing a 30% reduction in operational overhead in firms that have fully adopted this pillar. But it is important to understand the true goal here. This isn't about replacing humans with robots. It's about freeing the human brain to do what it does best: strategic thinking and relationship building. The wealth architect of the future isn't someone who can do the technical work manually. It's someone who can build and manage the system that does the work for them. Technology handles the execution. Humans handle the vision. This is the transition from a laborer to a designer of capital. The gap between the AI-powered institution and the legacy firm is a canyon that is widening every single day. As we move further into 2026, the question for every professional and every firm is the same. Will you be the one building the architecture, or will you be the one left behind by it? We are entering the age of intelligence alpha, where the greatest returns go to those who can master the machine. In our next deep dive, we'll explore how you can personally navigate this career pivot and build an AI-ready professional profile that stands out to the world's top firms. If you found this blueprint valuable, hit the subscribe button and join our community at the Wealth Architect HQ. Let's build the future together.